Morsey explained that to reduce the cost of access to finance and make it available at scale for African countries, factors such as high interest rates as well as high collateral are deterrents for women in accessing finance.
One of the most detrimental issues is the high cost, high interest rate that face women. Second one is the issue of collateral, very high collateral. And particularly for women, this becomes a deterrent because in a lot of time you need, to have owned property, land, or certain type of assets that don't tend in African societies to be held by women. So all this, prevents from the supply side in terms of access to finance. So how does this, and I can talk about the other issues later, how does this relate to the global financial architecture? Because what we're trying to do, we're trying to reduce the cost of access to finance and make it available at scale for African countries, which mean that would trickle down to to companies, to banks, to private sector, to individuals, including women.
Right.
So without addressing the core issue of the cost of finance for governments, you will not be able to access that because government access to finance for governments, they are perceived to have lower cost than individuals. Whatever you're going to get will be above, there will be a risk premium above what the cost of finance to governments.
Standard Bank Namibia's Chief Executive Officer, Ervin Chipuka, noted that a lot still needs to be done to ensure an environment that supports access to credit for women, adding that the banking sector has come a long way in creating innovative solutions to try and support women-owned businesses.
I think a lot needs to be done to make sure that we have an environment that actually supports. I think my colleague here spoke about the access to credit and the need for collateral that women don't necessarily have. But I think the private sector, and especially the banking sector, has gone a long way to come up with innovative solutions to try and support small businesses in general, but more specifically women-owned businesses. And that is through things like, I think there is partnership. As you know, the banking industry in general, it's funded by depositors' funds, and there's always a requirement to protect that, and it's regulated. But I think a number of banks are partnered with DFIs to make sure that we are actually risk sharing, and therefore when a loan is guaranteed by a DFI, for example, a bank is able to extend without collateral, and then obviously that helps to make financing accessible to women in particular.
Chipuka further noted that the private sector should also ensure equity and fairness in recruitment policies and employ women in the core functions of organizations, amongst others.